Is Bitcoin headed towards $10,000? That is the question on everyone's lips as inflation threatens markets further. I'm Joel Flynn. Welcome to the Daily Forkast, July the 12th, 2022. US inflation data is due tomorrow, and it's got analysts and investors worried about crypto prices. Voyager's promised to pay people back. It just doesn't know how yet. Celsius continues its fight to get access to $650 million, and global regulators are talking once more about how to keep crypto in check. This is what's happening today from Asia to the world.
Join thousands of NFT traders who already start their day on CryptoSlam.
Could Bitcoin head even lower then? Analysts are increasingly calling out lower BTC prices. Crypto's biggest currency has just erased all of last week's gains. It was down 4% overnight in Asia, trading below $20,000 Tuesday morning Asia time. Ethereum fell even harder. It dropped 6%, changing hands at less than $1,100. The big risk, of course, this week comes from economic data in the United States. Inflation numbers there are due tomorrow. If CPI prices look too big, then the Federal Reserve could raise interest rates. That, of course, would make the cost of business, which is already rising quickly, even higher. Some analysts have said that could help push Bitcoin prices lower. Surveys out this week suggest 10K could ultimately be the bottom for this bear market. Others, though, have said economic fundamentals haven't changed. Here's Benjamin Stanley from Matrix Poll.
We had a strong job numbers out of the US end of last week, and so if anything, that probably charges the course of the Fed in terms of being hawkish and more rate hikes in future. So we would expect that liquidity overall is going to be tight, and within the crypto ecosystem, we continue to see players emerging that had liquidity issues from the Luna and Three Arrows Celsius fallout. And so I would think that the upside in the near term seems to be very capped. The positive thing, though, is that we've avoided another leg down on the fire sale of assets, as most of these players.
All right, we'll hear more from Benjamin in just a second. Meanwhile, the Texas heat wave is set to hit the Bitcoin hash rate. Miners in the state have agreed to suspend operations in order to prevent blackouts amid energy shortages. Voyager has promised to pay customers back, but can it keep that promise? The company is restructuring after filing for bankruptcy last week. As part of that restructuring, it has just said that USD deposits will be returned in full, though it doesn't know how to do that. The rest of your crypto assets, though, might not be fully covered. Voyager said it has around $1.3 billion of those crypto assets. It also claims Three Arrows Capital owes it around $650 million. The Celsius fight back continues. The troubled lender paid off another $113 million worth of debt on Monday to Aave and Compound. That's according to Etherscan data. Since the start of July, Celsius has now paid back more than $300 million. Zappa data shows it still owes $122 million, though. Paying off these debts does mean Celsius will potentially get access to collateral. If it manages to clear the debts completely, it would ultimately unlock around $650 million. If you want to find out whether you're affected by that, like and subscribe to this video. We will keep you informed about the latest on what's going on in the crypto winter. Head to Forkast.News as well for more on what it all means. The link to that is in the description below. All right, let's get more from Benjamin Stanley of Matrix Poll. Benjamin, thanks again for joining us. Look, we've seen some degree of stability in markets over the last couple of weeks. Indian investors, though, increasingly missing out on opportunities, though. We know trade volumes down substantially after this new tax on crypto there. What do you make of that? What is your reaction to how India is dealing with crypto?
Yeah, but we've seen a number of new regulations coming out of India, and I think India, like most other places, a regulatory framework is not really in place yet. In fact, in India, it was a back and forth for a couple of years, and obviously these uncertainties, they're not ideal, and they bring a bit of challenges for crypto companies. Despite that, we've seen a number of successful projects actually out of India, and we've seen the adoption of crypto in India being extremely high. India's ranking, according to latest statistics, as one of the top adopted countries for crypto. Now, what we've seen, the first step was the beginning of the year, where it was a bit of a double-edged sword, where the government announced a 30% capital gains tax. It did, however, already result in a major drop in volumes in India. This policy came in effect in April, and now with the 1st of July, we've had another negative policy coming in, which is basically putting a 1% levy on all transactions in crypto. And together with that, we now see volumes at major Indian exchanges down more than 90% versus last year. And we're also starting to see more actively major Indian players to float the idea of relocating to jurisdictions that are more crypto friendly, particularly Dubai.
In terms of regulation, we seem to be seeing a greater degree of coordination between central banks, the Monetary Authority of Singapore, the Bank of England, and the Reserve Bank of India, all supposedly talking. The US, of course, we know is cooperating with South Korea, looking into Terra Luna. Is this a good thing that we are seeing these international authorities working together?
Probably harmonized regulation is a good thing for our industry because it allows players to internationalize, and crypto is a global market, so having the same set of rules applied globally is actually a good thing, I would say. Now, what we've seen is, though, that there's a lot of jurisdictional arbitrage, and big players have been able to get favorable jurisdictional and legislation and licenses from countries where they announced that they're shifting their headquarters over. Singapore is an interesting one. Singapore has been very crypto friendly, and now we're probably expecting a bit more scrutiny after the Three Arrows blow up. Basically, the fund was mainly domiciled in Singapore, and MAS already announced that they are investigating into them. The ultimate goal there is consumer protection, and they made it clear that they're gonna go really hard on bad behaving actors. In Korea, we've had the blow up of Terra, which was rooted in the country there, and Do Kwon is already under investigation from Korean prosecutors. The SEC had already served Do Kwon in November last year, and so there's obviously room for cooperation with Korea and the US, and I honestly believe that there's going to be more of these corporations with governance globally.
All right, Benjamin, what are the opportunities, what are the challenges then of how global authorities are catching up with taxation and regulation of crypto?
So I think the big opportunities are obviously like for our industry to create a level playing field where you don't have companies just competing on jurisdictional advantage, but actually on best practices and innovation. Obviously, jurisdictional competition is also something that is actually helping our industry itself, because it allows us to it allows governments to actually attract talent for crypto, and so therefore it puts pressure in not just over-regulating and banning the industry outright, because that way you are losing out competitively versus other players. So it's this fine line between making sure that you have consumer protection in place, you prevent these fraudulent actors, but at the same time you're not shutting the door to innovators and builders.
All right, thanks a lot for that, Benjamin Staney from Matrixport. Regulation is also high on the agenda for the Financial Stability Board. In a statement yesterday, the International Financial Watchdog said it is working on a robust framework for crypto. It said it's worried about recent market turmoil, especially what's been happening with stablecoins. Forecast's Timmy Shen reports.
The FSB's recommendations for approaching regulation, supervision, and oversight on stablecoins are set to be presented to G20 ministers and central banks in October. The watchdog says stablecoins need to be captured by such regulation if they are to be adopted as a widely used means of payment or play an important role in the financial system. It goes on to say that any stablecoin which could be used in multiple jurisdictions could pose a threat to financial stability, and that transparency is vital. Speaking during Forkast's recent Future of Stablecoins event, Caroline Pham of the US Commodity Futures Trading Commission made a very similar point.
But it is important to have that transparency, not only transparency into transactions, but also transparency into these different, frankly, financial institutions, these crypto firms, and what are their financial resource requirements? What leverage do they have? What minimum capital are they holding? What are their risk management policies and procedures? I think all of that is very important for people who are using their products to understand.
The FSB also recommends strengthening international cooperation and coordination on such matters, something which FAM also agrees on.
I think we have to come together when we're looking at a global issue. It's nothing that I think any one particular authority can solve for themselves, in just a silo. It has to be done together through open dialogue and open discourse. So with that, I think one of the things that's very important to address is to make sure that there's a level playing field for global markets and global businesses. A level playing field ensures that everybody is playing by the same rules and that the protections are applying and that there's no loophole or no way to go in and game the system.
At the same event, legal expert Jason P. Gottlieb of Morrison Cohen notes it's another of the FSB's concerns: investor protection.
Because I think only cooperatively between industry and regulators can we get to workable rules that will protect the industry at the same time that we are protecting investors in the industry.
Meanwhile, ex-Fed risk specialist Michael Shing, who is now with fintech company XREX, told Forkast that compliance is currently a difficult task for the industry, as laws and regulations are not perfectly clear and new rules are still being deliberated. Shing agrees that it's fundamental for stablecoins to fulfill high regulatory standards. He says while they are a type of cryptocurrency, people do not see them as a speculative asset, and that investors look to stablecoins as a safe store of value and reliable medium of exchange. I'm Timmy Shan, Forkast.
Meanwhile, the Bank for International Settlements has its sights set on CBDCs. In a joint report, the central bank for central banks says fundamental decisions need to be made on official digital currencies. Forkast's Lachlan Keller has more.
According to the 61-page report, central banks need to ensure multinational interoperability and widespread access, even to non-citizens. A CBDC is a digital currency issued by a central bank which uses crypto technology to lower costs and enable more seamless cross-border transactions. According to the Atlantic Council, over 90 countries have active CBDC projects, ranging from the research stage through to full implementation. However, the report recommends the involvement of central banks which aren't yet actively exploring CBDCs in the planning process, saying international collaboration is paramount.
Given that CBDC is new to all, it provides a clean slate opportunity to coordinate and incorporate cross-border functions from the start, to avoid unintended barriers later.
The report says there are three ways of achieving that interoperability: compatibility, interlinking, or using a single system. It recommends compatibility as being the easiest and cheapest in the short term, but says interlinking or a single system could yield greater returns in the long run. However, it concludes that there is no one-size-fits-all approach and says the report is simply a tool for helping central banks assess how a CBDC could suit their particular needs. I'm Lachlan Keller, Forkast.
All right, that's it for today's Daily Forkast. We have got the latest updates on Twitter. Make sure you follow us there at Forkast_News. But until next time, I'm Forkast's Joel Flynn. I'll see you then.